In this presentation, we will continue on with our comprehensive problem related to a not-for-profit hospital. We're going to have the information on the left-hand side. We've been entering that information into the blue area on the right side, including entering into the general journal, entering the journal entries, journalizing the journal entries into the general journal, then posting those transactions to our trial balance worksheet. This time, we're going to be taking this information in our adjusted trial balance, where the ending trial balance we have left off with last time, and entering our closing entry process. To do this, however, we're going to be going to a new trial balance. So we're going to take these ending numbers, and these are going to be our beginning numbers as we consider our closing entry trial balance, which will be down below. So if we scroll down below, we can see we have our beginning trial balance. This is the one that we will be working with the closing process. These beginning numbers are coming from the ending numbers up top. So those ending numbers up top are our beginning numbers down below. So these are going to be our beginning numbers. That allows us to enter our transactions related to the closing process in a nice clean format. It allows us to end off with a trial balance which has a post-closing trial balance, as well as have a trial balance that is the adjusted trial balance up above. The post-closing trial balance will have all of these accounts down below what would be the equity section in a for-profit organization. Zero. We're going to zero out all those items. We're going to close them out into what would be the equity section in a for-profit organization, here called the net assets section. The thing that's going to be different here in the not-for-profit or in the hospital is going to be the fact that the net assets are broken out between with restriction and not with restrictions categorizations. And so we're going to have to deal with that. In essence, what we're going to do is record the journal entry for the closing entries as we would in a for-profit type of organization. However, just with a one-step process, we're going to close out all of these accounts that are going to be the temporary accounts, those similar to the income statement accounts, with one journal entry doing whatever we need to do in order to make them zero. Then we're going to record the other side to the net assets without donor restrictions. Next, we will make the adjustments to allocate whatever needs to be allocated between the net assets with donor restrictions for the various purposes. So that's going to be what we're going to do. Let's take a look at it now. So we're going to start off with revenue up top. So we got the revenue. It has a credit balance. We're going to make it go down by doing the opposite thing to it, which will be a debit. So we're going to go back up top. We're going to start entering our adjustments, and we're going to be on number 9. Number 9, we're going to say equals and scroll down and pick up the patient revenue. Then we're going to be on the debit side. We're going to take the credit, which is represented by a negative number, and flip the sign. So here in L42, we're going to say instead of equals, negative of. Scroll back down. We're going to pick up that 3,502,800 and enter. Next, we're going to pick up the next account in the trial balance, and that'll be the other operating revenues. We're going to be on the debit side. We are in cell L43. Going to flip the sign by saying negative of. Scrolling back down, we're going to pick up the other operating revenues. And then we're just going to keep going straight down the list here. You could use the autofill. I'm going to do it one by one just so we get an example of the whole process. We want the investment income. It too has a credit balance. It too then will be on the debit side because we're going to debit it in order to make it go down. Negative of. Scrolling back down, picking up the investment income. The next account is going to be equal to, and now we're on the expense type of accounts, the debit balance type of accounts, that being the contractual adjustments. Enter. This is going to be on the credit side. Once again, we're going to take the debit and flip the sign. Therefore, in cell M45, we're going to say negative of, scrolling back down to find the contractual adjustments, this number, and enter. And then we're just going to continue down the line. So the next account after the contractual adjustments is the administrative expense, and enter. We're going to be on the credit side in M46, negative of. Scrolling back down, we want to pick up the administrative expense, the 504,880. Next, under the administrative expense, we will say equals, and we'll scroll back down to see what we have next. We want the general service expense, and enter. We're going to be on the credit side in M47, where we will say negative. Scroll down, and we want the general service expense, and enter. Next, we want the nursing, so we're going to say this equals. Scrolling back down to the nursing service expense, We're going to be on the credit side in M48, where we will say negative of, and scroll back down to the nursing service expense of the $1,296,25. The next item is going to be under the nursing expense, where we have the other professional service expense. We're going to be on the credit side in M49, negative of, scrolling back down to the other professional service expense and enter. Then we're going to have the unrealized, I think it was, equals, let's check it out, let's double check, equals the unrealized loss. And so we're going to say enter, and we'll pick that one up, and I'm going to say negative of on the credit side, the unrealized loss. Okay, so that's everything except for these last two accounts. We're going to do that in a separate journal entry. We'll close them out individually in a separate journal entry. Now, we're going to need the credit to balance this thing out, because if we add up the debits and the credits, we're out of balance by the $90,659. We're going to put that on the credit side. That's what we need, a credit to be in balance. We're going to use our trusty negative sum formula, the plug formula. So we'll sum these items up. And that then is going to go to the net assets without donor restrictions. So we're going to pick up the net assets without donor restrictions there. Actually, I'm going to pick up the other net assets without donor restrictions. This is going to be equal to, we're working with the net assets without donor restrictions, and it's the undesignated item. And so this one is 0. And so we're actually not using that one. We don't know it's an added account here. So don't worry about that account. That one will not be involved in the process. All right, let's go ahead and post this out. We're going to scroll back up top. We have the patient service revenue. Scrolling down to the patient service revenue, we're going to be down here. We are in cell Q61, where we will say equals, scroll back up, and we will pick up that 3,502,8 and enter. Next, we're going to go to the other operating revenues. Scrolling back down, the other operating revenues, that's going to be in cell Q62 equals, and we'll scroll back up and pick up the other operating revenues, the $1,003,555, bringing it down to 0. That, of course, being our objective. Then we're going to go to the investment income without donor restrictions. We are here in investment income without donor restrictions, Q63 equals, scrolling back up to the investment income without donor restrictions, the 9,980 and enter. Then the next one is going to be the contractual adjustments, That's going to be in cell Q64, where we will say equals, scroll back up to the contractual adjustments and pick up that number and enter. And these are, of course, will be in order. We could autofill them down, which I will do after this one. So here's the 5,480 to the administrative expense. I'm going to enter this one, then autofill, which will pick up these in a row: the general, the nursing, other professional, and unrealized lost amounts. So let's do that. So I'm going to do the one more here. We'll do one more. This is going to be equal to the administrative expense on the credit side. And now we're going to use the autofill function to make this go a little faster. I'm going to put my cursor on that 504,880, put our cursor on the autofill handle, left click on it, drag down. And there we have that auto-filled all the way down. I shouldn't have done it to these last two because we're not doing those yet. Those will happen later. So I'm going to delete those, and there we have it. So all these go down to 0. That's what should happen. We could double check that this number is picking up the right number by basically using our little arrows here. Those can be found in the Formulas tab in the Format Auditing, and these two little guys, I would put them up top. I think they're very useful. And then I'm going to go up top and say, yeah, that looks like it's picking up the right number. You can also tell, of course, because it did its job by making this go down to 0. Okay, so that is that. Now we just have to record the last component of our transaction to be back in balance, that being the net assets. The net assets without donor restrictions, undesignated, we're calling it. That's going to be this one. We are in cell Q58. So within Q58, we will say equals, scroll over and pick up that 90,659. That increases this one in the credit balance, in the credit direction. That then puts us back in balance here. So now what we need to do is do some allocation processes here. We've basically done our closing entry process, but now we've got to close these last two out, which are in essence a reallocation from things that were with restrictions to without restrictions. And we're going to go back through kind of some reallocation between these net asset accounts. One of those reallocations is going to be taking the money out of this item and putting it into the net assets with donor restrictions designated for the plant. And that's what we're going to say. If we scroll back up top, we're going to have to pick up these amounts in our transactions. Where are they in our transactions? We're going to say the amounts that are related to the interest on the investment, which was limited as to use. So that's going to be this amount, and it's going to be this amount down below. Those two amounts are going to be limited as to use because they're related to the investment, which is limited as to use. And so therefore, we're going to recategorize them from the without donor restrictions account to the with donor restrictions account designated for plant assets. Okay, so that means that we're going to make this item go down. It's a credit balance. We're going to make it go down by doing the opposite thing to it, which is a debit. So we're going to be on the debit side. We're going to pick up this account. We're going to make it go down. We're going to pick up the numbers by saying equals, scroll to the left, scroll all the way up. We want to pick up that 8,350 plus, scrolling back down that 684 and enter. And sorry, that should be a minus. I'm going to double click on that because this is a loss. So I'm going to say this should actually be minus. So let's do that one more time all together here. It's going to be equal to, I made them green on my side, so it's probably easier to see over here. This one, which probably isn't green on yours, is number 2, which is the interest on investment in assets limited, minus, scrolling back down, picking up this one, unrealized loss on investment, and enter. So that's what we want. The credit then is going to be for the same amount, which will be the credit. That then increasing the other net asset accounts, that being the net assets without restrictions. So there we have the two. So let's record this out. Net assets with donor restrictions is going to go down. That's going to be this one. This is in cell Q58. Within Q58, we're going to say F2 plus F2. Scroll back over and pick up that debit and enter. So there we have that. And then the one without is going to be the one without donor restrictions. We are in cell Q59, where we will say equals, scroll over and pick up the credit and enter, and that then goes up in the credit direction. Scrolling back down to see what we have down below, we are back in balance, so everything is looking good. Next, we're going to close out these two. So we're going to close out these two items, which is basically a reallocation of things that were once restricted, which are now no longer restricted. So we can do this, we're going to close these to their respective net asset accounts. So the one without restrictions will be closed out to the net assets without restrictions. The one with restrictions will be closed to the ones with restrictions. I think it's easiest to do this with two separate journal entries. First, closing this one out. That has a credit balance in it. We're going to do the opposite thing to it in order to close it, which will be a debit. So I'm going to scroll back up top. We're going to have a new journal entry. This will be equal to this item, net assets released from restriction without donor restrictions. And that's going to be, I'm going to say, a debit. So we are in cell N54. Don't worry about just typing over the words here. The words will go away. I'm not going to wrap the text or do anything fancy to it. And that's going to be for the 97.5. Then we're going to have a credit for the same amount. The credit then going to the net assets without restrictions. So there are the two. So then we can record this out. We're going to say, okay, here's this one. If we scroll back down, we are in cell Q70. Within Q70, I'm going to say equals, scroll back up to our number, the 97.5, and enter. That brings it down to 0. Then we're going to have the net assets without donor restrictions. That's this one, net assets without donor restrictions. That's going to be here in Q58. Within Q58, we're going to say F2 plus F2, because something's in it. And then you go over to that 97.5 and enter. So there we have that. We've closed that one out. This one's now closed. We now are back in balance. One more to go. We've got the net assets released, satisfaction purpose with donor restrictions. That's a debit balance. We need to credit it to make it go down to 0. So I'm going to scroll back up top. I'm going to make a new one, but I'm going to put this one on the bottom. So I'm here in K60 where I'll say equals, scroll back down, pick up that amount, and that's going to go to the net assets with restrictions. So the debit then up top will be the net assets with donor restrictions. And the amount, I'm going to be on the credit side and put the amount and say it's going to be negative of this number, the 97.5, enter. And then the debit is going to be negative of that number. So there's our transaction. Let's go ahead and post this out. See if it finishes things off, makes everything look like what we want it to look like, all kind of like the temporary accounts being 0. Net assets without donor restrictions then, we're going to say is here. We are in cell Q60. Within Q60, we say equals, and scroll over to that 97,500. So there we have that. And then we're going to go to this account, net assets released. So scrolling down to cell Q71, we'll say equals, and scroll back up to that 97.5 and enter. So there we have that. All right. So now all the kind of like income statement type of accounts are now 0. And so, and then we just have basically the balance sheet accounts, and we have the allocation within what would be the equity section, the net assets section here. We can see that, of course, the assets minus the liabilities adds up to the 2,605,19, which is equivalent to the equity, 2,605,19. And of course, if we were to add up all, and when I say equity, that would be for a for-profit. Here it's called net assets, same kind of concept. If we were to add up all blue accounts on this side, including what would be the net assets beginning balances and the activity in what would be equivalent to the income statement, the temporary accounts, it also adds up to the 2,605,19. So this is our post-closing trial balance. We now have the post-closing trial balance. We have the adjusted trial balance. We're going to use these next time to start to put together our financial statements.